Procurement. Sorry, that's all right. Thank you for joining us today. My name is Bethany Manimbo with the Montgomery County, Maryland Office of Procurement. This is our 2025 Prevailing Wage Law webinar. So welcome and thank you for joining us today. First, I want to introduce some of our staff members. I'll start with Grace Deno and Steve Noguera.
Good afternoon, everyone. Thank you for joining us and spending 2 hours learning about prevailing wage. We're lucky to have CCMI and Deborah Wilder presenting today. It's very rare that these opportunities come our way, so thank you for taking advantage, and I appreciate your attendance today.
Thank you. And I will introduce Deborah Wilder. Our presenter, Deborah Wilder, is the president of the Contractor Compliance and Monitoring Incorporated. She's been working for more than 40 years, helping contractors around the country understand prevailing wage. She is a nationally recognized authority in the field, performing prevailing wage audits for awarding agencies, and is the author of 3 books on the subject. And I will now turn it over to our presenter, Deborah Wilder. Just a little housekeeping note, we will, you can put some questions in the chat box if you want. I'm sure Deborah will also pause at certain points to answer some questions. We will provide these slides. Since everyone didn't register, we will put them on our website. And I will turn it over to Deborah. Thank you.
So thank you. Good afternoon, everyone. It's my privilege to be able to share some of the knowledge I have about Montgomery County's prevailing wage requirements. We have been working with the county since 2009, and we have staff in Maryland. Some of you may have run across some of our staff on your projects or have spoken with our staff. But I just wanted to take the opportunity to go over Montgomery County's prevailing wage requirements. And I am happy to take questions if you want to put them in the chat. And we're going to be new best friends over the next 2 hours. So we will get on our way. So the state of Maryland has had prevailing wage for many, many decades. But in September of 2008, the governing board in Montgomery County adopted its own prevailing wage requirements for projects which have county funding in them. And that became effective June 1 of 2009. And it requires the payment of prevailing wage on county-funded projects when those projects exceed $250,000. That's the threshold amount. The county adopted many of Maryland's prevailing law provisions, but not all of them. And we're going to discuss that. So if you say, oh, I do work in this other county and they make me do X, well, these are Montgomery County's rules, and they are very similar, but they're not identical. So let's start with the definition of construction. So the county has defined construction as the process of building, altering, repairing, improving, rehabbing, resurfacing, pavement milling, or demolishing. And that covers a structure or a building or any kind of other what I would call improvements to real property. And that includes routine operation, repair, and mechanical work. Includes service systems for maintenance on existing structures, building, or real property. So some of you may be familiar with the requirement to pay prevailing wage when we're building a building, but there is also prevailing wage included in certain types of routine repair and mechanical work being done. So let's talk about that work of improvement. It is improvement that is done on site, on the site of the construction project or on the site of the county property in which you're providing this maintenance or repair. And work performed in your permanent shop is not covered by prevailing wage. And so the contractor always says, on-site's covered, off-site's not covered. I'm going to be smarter than, everybody else, and I'm going to set up a temporary site, off-site, but just around the corner or down the block. And I'm going to be doing a bunch of stuff on that project, and then we'll just take that and deliver it, 2 blocks to the project. So that if you perform work in a temporary shop, which is set up what they call adjacent or nearly adjacent to the project. So if you're setting up a temporary shop near the project, and that the work on that in that temporary shop is going to be servicing that particular prevailing wage project, then prevailing wages can attach to some of the work you're doing on that temporary site. So let's be clear, on-site is covered, off-site work in your permanent shop is not covered. If you're trying to set up a temporary site, then work performed on that temporary site near the project will also trigger prevailing wage. The other items that are not included in prevailing wages are supplier deliveries. So let's just say you're helping the county build a fire station, and there have been a cabinet order, and you have a supplier who's making the cabinets, and they're delivering those to the job site. They are not installing them. You have a different contractor who's going to install them. So that is purely a supplier delivery. Somebody's just delivering the materials or supplies that they agreed to, and there's no prevailing wage associated with that. Professional services are also excluded from prevailing wage. So that would be like surveying work, inspection work, certain types of material testing or soil samples that have to be taken. So that's just kind of an overview of what type of work is covered. Now let's talk about who is covered. So employees on the project who are what I call working with the tools. So if you have a safety inspector out on the site and they're walking around and they're just checking on the safety requirements on the project, making sure everybody has their hard hat and their vests and their glasses and, everything's being done correctly, that safety officer is not working with the tools, and so the work that safety officer does just walking the site is not covered by prevailing wage. There is also an exemption for supervisorial or management personnel. So if you have a project superintendent who's walking around with a clipboard, checking on things, having meetings with subs, meeting with the county, that supervisorial work is not covered. Employees who are on a salary and meet the overtime exemption of what's called the Fair Labor Standards Act, Section 541, they are excluded from the payment of prevailing wages on the project. Having said that, most of your workers should be on an hourly basis. Just putting your worker on a salary basis by itself does not exempt them from prevailing wage. They have to qualify as a management supervisor employee. They must meet the salary test, and they must meet the other tests of the Fair Labor Standards Act, such as that they supervise 2 or more employees, and they direct work, and they can hire and fire people. And so I had one contractor, not on this project, but decided they were going to make everybody's salary so they could all be exempt from prevailing wage. And that didn't work because 98% of the workers were working with the tools. They were building the building. They weren't directing the work of the entire project or of the entire crew. So again, the exception is fairly narrow Most of the time, your workers working with the tools are going to be covered by the Maryland/Montgomery County prevailing wage rate. I do need to point out that there is no such thing as a 1099 employee. A 1099 goes to an independent business. That's what the IRS code says. It goes to an independent business. So somebody who has a business that's set up, they contract with multiple people. Most of the time they have multiple employees. They provide their own tools and equipment and a variety of things. If you are employing a part-time employee, a temporary employee, an employee through a staffing service, those are all employees, and a 1099 can only be issued to a legitimate independent business. And so every once in a while, not most of the time, but every once in a while, I get a contractor who says, oh, they're just a 1099 employee. I don't take any deductions out. I just give them a 1099 at the end of the year. If they are, in fact, 1099 eligible because they're a legitimate business, they need to be filling out their own certified payroll. So you either have employees, full-time, part-time, temporary employees, or you have a subcontract with an independent business, and only that independent business is entitled to the 1099. Everybody else who's doing work on your project, even temporary employees, are covered by prevailing wage requirements, and you need to treat them like employees for the purposes of taxes, for the purposes of workers' comp, for the purposes of unemployment, all of those things. So let's talk about how you pay prevailing wages here in Montgomery County. So there is a wage determination that is typically issued once a year by DLLR. That's the agency that issues prevailing wage determinations. And they issue those once a year. And there are typically a wage component and a fringe benefit component. And at the end of the day, you have to pay the total amount of the wages and the fringes combined in some way, shape, or form. And you can put all of that on the paycheck, or you can put some of that on the paycheck, and then also pay some kind of benefit on behalf of your worker. And the value of that benefit, which is like maybe you're providing a health and welfare plan. We're going to talk about how you calculate the premiums you pay into a per hour rate. So you could say, let's just say you provide a medical plan and your medical plan equates to $5 an hour. You can take that $5 an hour as a credit against the fringe benefit. So wages plus the benefits you pay have got to equal that total amount. Wages are paid based on the type. I'm going to go back one more because I want to explain this a little bit better with some real numbers. So let's just say the prevailing wage rate is $35 an hour and the fringe benefit package is $15 an hour for the total amount of $50. That $35 absolutely is going on that paycheck. Of the $15 that are allocated to fringe benefits, you, the contractor, have two choices. If you provide medical, dental, pension, you calculate what that is, and you say, oh, how much of this $15 does my company pay on behalf of the worker? And then let's just say between the medical plan and the pension plan, that equals $10. Well, now you have $5 left over in fringe benefits, and you don't have any benefits you can pay to your worker. So then that $5 will have to go on the employee's paycheck as what's referred to as a cash fringe. Don't pay it in cash to your worker. You want to put it on their paycheck, but it's referred to as a fringe benefit that's put on the paycheck. So the employee will receive their $35 in wages, $5 on their additional $5 on their paycheck as part of a fringe benefit. And then the company is paying $10 in fringe benefits on behalf of the workers. So I take the $40 that's on the paycheck and I add it to the $10 that the company is paying in fringe benefit. And then and adding those two together, we still get to $50. If you don't have any fringe benefits, you could pay $35 in wages and $15 in fringe benefits on the employee's paycheck. So at the end of the day, it's wages plus any fringe benefits that you're paying have to equal $50, the total amount of the wage and fringe package for your craft that you're employing. And so I'm assuming most of you have been on a prevailing wage project before. So you're going to pay based on the craft that you identify for your worker. So if you're performing carpentry work, we're going to be paying carpenter's wages. If you have somebody who's unloading the truck, that is laborer's wages. If you have somebody who's pulling electrical wiring, that is electricians. So you have to look at the proper classification to determine the wage and the fringe package together that has to be paid. So again, wages are based on the type of work performed and the type of tools used. It's not based on titles or even job skills. So let me just give you an example. Let's just say I'm working on a project in Montgomery County, and when I get to work, my supervisor says, Deborah, I want you to help unload these materials and put them in the container, and I do that for 2 hours. And so that is clearly laborer's work. Then my supervisor says, hey, we're a little short-handed. I need you to go upstairs and help with the drywall. So I go up, I've hung drywall exactly once in my life, so I'm not very proficient at it. So I go upstairs, and for the next hour, I attempt to help the crew hang drywall. Now my supervisor comes up and looks at that job and says, ooh, that is horrible. Deborah, you're going to get to paint for the rest of the day. So at the end of the day, I would have to be paid not less than 2 hours as a laborer, 1 hour as a drywall hanger, and 5 hours as a painter. Because it doesn't matter what you call me or what position I was hired to, the fact that I perform these different types of work and use the tools associated with that work will determine the prevailing wage I get paid. Now, somebody will say, but the sheetrock you hung was horrible. They had to take it down and do it again. And it doesn't matter if I don't have the skill set. If you had me performing a task with these tools, you've got to pay me that journeyman prevailing wage rate. So just keep that in mind. It's based on what the worker does and the tools they use, not necessarily on their job title or job skills. If you might get temporary employees from a temp agency to help you on a project, and you may not know their skill set, but if you say you're going to go, work on the roof, or you're going to go hang drywall, or you're going to go do plumbing, irregardless of their skill set, they will get paid based on the classification of work they perform. Now, every once in a while, what you're doing on the project is not listed in the wage determination. This happens from time to time. So if there is what I call an omitted or a missing classification, you're going to want to you can contact CCMI, and you certainly need to contact Steve Nagura, who is the program manager, and his phone number is right there. And so again, we're recording this session and you can, download it and keep it for future reference. But again, if there's a classification that you're not sure about, or you're doing some kind of work and you're not sure about the classification, please, please, please call Steve or email Steve, email my team, and we will try to work together to get you an appropriate answer. Unskilled labor is not the default classification. I've had contractors say, well, I couldn't find the classification, so I just decided to call them an unskilled labor and pay them that wage rate. And maybe they were setting up a communication data system, and that would have been an omitted classification, and we would have had to have included something there. I've got a couple of questions in the chat, so let me just stop for a second and see what we got. So Bethany's asked you to enter your name and email address in this survey. She's given you a link so that you can do that. And that's all I've got. So let me just keep moving on there. So Maryland and Montgomery County have an overtime requirement after 10 hours in one work day or 40 hours in one work week. So if you're working on one of our projects and your crew is going to work more than 10 hours a day, you will then have to pay the worker time and a half on the base wage rate, not on the fringe benefits, but you have to pay time and a half on the base wage rate. Same goes if you're working more than 40 hours a week. Now, there's also a requirement that if you work on Sundays, your employees will get time and a half. It's got nothing to do whether they work more than 40 hours. If they work on Sunday, they have to be paid time and a half. And all holiday work. So if you're going to make somebody work on one of these 6 holidays, New Year's Day, Memorial Day, 4th of July, Labor Day, Thanksgiving, and Christmas, it's going to be at a premium rate, which is the equivalent of 1.5 times their base wage rate, plus 1 time on the fringes. You should also check the footnotes on the wage determination in case there are additional holidays which apply to a specific trade. Now, there's a question in the chat box that says, how long does it take to obtain approval or of an omitted or misclassification? It can take as short as an hour. It can take as long as a week, but it's generally not. Oh, there we go. Steve already answered it. It could only be a day, but it could be up to 2 weeks if we have to go to the state to get that clarified. But if you're, if you have the opportunity before you actually start work on the project to figure out what kind of classifications you're going to pay and they're not there, let's have that conversation earlier, as opposed to, I've had somebody out on the project doing this work and now I have to cut payroll today and I don't have a classification. So we want to be proactive with you. So please, please, please contact Steve. All right. This is an example of how overtime is calculated. So I give you a scenario with a base wage rate of $25 and fringe benefits of $10. So the base wage rate times 1.5 plus the fringe is 1 time. So I'm only paying time and a half on the base wage rate. And so that total amount then for time and a half would be $47.50. Now, there's an exception to this, and that is if the employee's normal base wage rate is more than the prevailing wage, then you have to pay time and a half of the employee's rate. So if the employee normally receives $30 an hour, then you have to pay them time and a half on the $30 an hour. Now, let me just point out one little trick, not trick, but one other tip, maybe a best practice you can use. If you are paying any part of the fringe benefits on the employee's paycheck, I would encourage you to make that a separate line item on the check. Because if the employee sees they're getting paid 40 hours at $35 an hour because you've added the fringes and the wages together, they are not going to understand when you calculate overtime why they're not getting time and a half on that $35, okay? So if you have a wage rate, so we have, let's just say we have 40 hours at $25 an hour, which is our prevailing wages. And then let's just say we worked 5 overtime hours. So I would have 5 overtime hours, which would be $37.50. And then I would have 45 hours for fringe benefits. So that would be 45 hours times $10 if I'm putting all this on the paycheck. So I just need you, because then it's easy for the employee to see, oh, here's my wage rate, here's my time and a half, and here's where the company is paying me fringe benefits on my paycheck, but you're not having to calculate overtime on any of those. Let's see what I got there. All right. I hope that's understandable to everybody. Let's move on. So let me talk about fringe benefits, because fringe benefits will oftentimes confuse what I call an open shop or non-union contractor. If you are in fact union signatory, your collective bargaining agreement will dictate the per hour rates you are going to provide to the union trust funds for health and welfare, pension, vacation, a whole variety of these items. The fringe benefits have to meet the first 5 bullet points. So first and foremost, the benefit, it has to be for the benefit of the employee. We would say yes, of course. The employee has to qualify for the benefit. The benefit has to be definite and certain. The contribution must be irrevocably made, and it has to be paid not less than quarterly. So when I say it has to be for the benefit of the employee, that is typically health and welfare, dental, vision, pension, vacation, special vacation and holiday pay that you pay, a variety of things like that. It does not include a uniform cost. So most recently, again, not on any of these projects, but in a neighboring jurisdiction, we had a contractor who said, hey, I deduct $1 an hour from all my employees because I provide them with five clean t-shirts every Friday for them to take home and use during the week. And then I take their old t-shirts and I launder them and bring them back. And, so the employees are being benefited and that they don't have to worry about what kind of shirts they wear, and I'm doing the laundry and whatever. That is not a fringe benefit for the benefit of the employee. That is basically so the company can brand themselves by all wearing whatever it is, purple t-shirts or whatever. So you have to make sure that whatever you're doing is for the benefit of the employee. The other item that comes up for benefit of the employee is if an employer wants to charge the employee or take a deduction from their payroll for transportation costs. That is usually not acceptable as a fringe benefit. Now, some of you may have great fringe benefits that you provide to employees, but maybe they don't get them the first day they work on the project. Maybe they have to be with you 30 days, 60 days, 90 days before they qualify for that benefit. So what that means is you're going to have to pay them the cash equivalent of that whole fringe package until such time that they qualify for the benefit. And then after 60 days, maybe they qualify for the health and welfare. So then you can take wages plus the fringes paid has got to equal that prevailing wage. Benefits obviously have to be definite and certain. The employee has to know, yes, I have health and welfare coverage. They don't need to tell me that their deductible in-network is $50 and out-of-network is $85. We don't need that level of detail, but they need to know that they're receiving a benefit and at least something about that. Finally, the contributions have to be irrevocably made, so you don't get to say, I'm going to provide you with vacation and sick leave days, but if you leave your employment, you forfeit anything that you have not already taken or claimed. And if there's any kind of forfeiture provision, then that entire benefit will not be allowed for the purposes of prevailing wage. Finally, the payment of these fringe benefits are typically made either weekly, monthly, or quarterly. They cannot be made annually. And having said that, I just want to be really clear that a true profit sharing plan does not meet these requirements. And let me just go over that briefly. A profit sharing plan means I have to make a profit. As I'm sitting here in May, do I know I'm going to make a profit? I won't know that until I get to the end of December. So it's clearly not definite and certain. And then what are the requirements of the profit sharing plan? Do my employees have to work the last quarter of the year in order to participate in the profit sharing plan, or do they have to be employed on, December 31st to qualify? So we don't even know if the employees qualify for the benefit. And then when I decide what that benefit's going to be, is it going to be 3% of their salary or 5% of their salary or 10% of their salary? Again, not definite and certain. And then of course, we only pay that once a year. So it also doesn't meet the quarterly requirements. And some benefits have to be amortized. So pension benefits do not have to be amortized and calculated into a per hour rate. All your pension benefits have to meet the Department of Labor and ERISA guidelines. ERISA is the Employee Retirement Income Security Act. If you're dealing with, a regular pension plan or 401k plan or some kind of plan that you have some third party administering, 99.9% of all of those plans are approved and it will not be a problem. There is, however, a special Davis-Bacon or / prevailing wage pension plan that your company can set up if you do a lot of prevailing wage. It doesn't make a lot of sense to do it if you do an occasional prevailing wage project, because to set up your special prevailing wage pension plan will cost you a little bit of administrative costs along the way. But if you do a lot of prevailing wage work, this is what can happen. You can have your contractor working at, let me go back to this, $25. You have a fringe benefit of $10. Maybe you have health and welfare that equates to $5. That other $5 has to go onto that paycheck unless you have someplace to put it. And so if you create a prevailing wage pension plan, that extra $5 can go into the pension plan. That extra $5 is pre-tax. That means it doesn't go on your payroll. There is no Social Security, Medicare, unemployment, workers' comp, things that are tied to your payroll. You will not be paying on that $5 that goes into the pension plan. The beauty of the prevailing wage pension plan is that the amount you contribute per hour can change. So let's just say I'm working as a general laborer and these are the prevailing wage rates you see in front of you. But then, later in the project, I'm working as a plumber and maybe that's $35 an hour and the fringe benefits are 15. Well, remember, my health and welfare is only $5, so I get to take $10 from the plumber's fringe benefits and put into this pension plan. The other beauty about the pension plan is that it only applies to prevailing wage work, either Maryland prevailing wage work, Montgomery County prevailing wage work, or federal Davis-Bacon prevailing wage work. You do not have to make contributions for any private work you do. So you might, if you've got some questions on this, we're happy to talk with you. I can send you some references. I don't own any interest in any of these prevailing wage pension plans, but it might be a way for you to save a few dollars on your overhead in this way. And I already discussed why profit sharing plans do not apply for the purposes of claiming fringe benefits. Now, most of you who are open shop, if you're providing health and welfare benefits, those are coming into you as a monthly statement. It's not broken down into a per hour rate. You get a statement, and Johnny's premium is $1,200 a month, and Sarah's premium is $800 a month, and the company pays, say, 100% of that, or you pay 85% of that, or whatever. You take the monthly premium that you pay, and this is a per employee calculation. You multiply it by 12 months in a year. You divide it by 2,080 hours, which are the work hours in the year, and that will give you a per hour rate. So let's just, for jollies, I'm going to run one of these. So I have a premium that's $1,200 times 12 months divided by 2,080 hours, and that equals $6.92 that you get to claim as part of your health and welfare benefit. Now, Sarah her premium is only $800 a month, so her per hour health and welfare premium is $4.61. So again, if you want to claim health and welfare benefits, other types of, some companies have certain disability benefits, dental benefits, vision benefits. These all have to be calculated into a per hour rate. And somebody will say to me, but I don't know if the employee is going to work for me for 12 months or for 2,080 hours. That's okay. We're going to use this formula to give you a per hour rate. And that is the per hour rate that the county, the state, and the federal government will recognize for your projects. And somebody says, well, what if my employees work more than 2,080 hours a year? And I will again tell you, this formula will work with the county, the state, and the federal government. If you want to calculate it some other way, we'll be having a conversation with you so we can understand that that's done correctly. And just remember, it is the portion of the benefit that the company pays. So if the premium is $1,200, but the company only pays $1,000, we have to make this calculation based on the $1,000 because that's the amount the company is paying. The other $200 is coming out of the employee's paycheck. So the employee is paying that part. We only get to count the part that the employer is paying. Now, let me also discuss how you can claim credit for vacation and holiday hours that you provide. Number one, your vacation and holiday policy has to be in writing. And if you claim vacation and holiday, we will ask for a copy of your vacation and holiday policy to make sure that, how many holidays there are, how vacation is accrued, and be clear that nobody's going to forfeit any of this if they leave your employment. So we take the total numbers of hours, and some people don't have vacation hours now. They call them personal time off hours, whatever that is. The total number of hours you will accrue over the course of a year. You multiply that by the employee's regular rate of pay, and you divide that by 2,080 hours, and that gives you a per hour rate that you get to claim for fringe benefits. So let's just say my company pays 5 holidays a year. That's 40 hours. And let's say my employee earns 2 weeks vacation. So that's another 80 hours. So I have a total of 120 hours times the employee's regular rate of pay. Let's just make that $30 an hour. That's the rate of pay the employee is going to be paid when they take that vacation or that holiday. And then I'm going to divide that by 2,080, and I get $1.73 that I get to claim on vacation and holiday. Okay. Let me move on to Maryland Montgomery County apprenticeship rules. Only those individuals who are actively enrolled in an approved apprenticeship program may be paid the lower apprenticeship rates. So apprenticeship is an on-the-job training program. So somebody with lesser skills is going to basically school, okay, on the side, outside of work, and taking classes in that classification trade, plumbers, electricians, carpenters, whatever it is. But they have to be enrolled in a legitimate approved apprenticeship program. Montgomery County will recognize apprentices in training programs in Maryland, Virginia, or Washington, D.C. This may be different if you work in different counties or you do work directly for the state. Most recently, the state has said if you're working on state projects, we are only allowing you to pay apprenticeship rates to those enrolled in Maryland apprenticeship programs. The county said they would recognize Maryland, Virginia, or Washington, D.C. for that purpose. The important thing about apprentices is that they have to be properly supervised. So, because once again, this is an on-the-job training program, that they have to have somebody who's supervising them. So I've got a couple of questions here. Let me just back up here. I have a fringe benefit question. Could you speak how benefits are dependent on an employee's elected utilization can be claimed? Our company matches a certain percentage. How much the employer pays into the program is dependent how much the employee elects to cover it. Absolutely. So you have 5 employees. 3 of them decide they want to participate in your 401k plan. 3 of them do not. I'm not going to worry about the 3. They don't get any. There's no fringe benefit credit there. You may have a plan that says we will match dollar for dollar every dollar you put into the program up to a maximum of 4% of your salary. And the employee has signed an agreement that says, okay, I want $1 an hour out of my paycheck to go to the 401k plan. And so long as the company is matching that, is separately contributing $1 for that dollar that the employee contributes, you just count that. You just figure out however much it is the employee has said they're going to contribute. Sometimes employees say, I'm going to contribute $1 amount, $1, $2, whatever it is, $3 an hour. Sometimes they say, I want to contribute a percentage. I want 2% of my salary to go to pension. And so that gets shown as a deduction from their paycheck. And then the company can match that. Sometimes the company matches 50 cents on the dollar. Sometimes they match dollar for dollar. Sometimes they have a cap. You just have to figure out what your company is contributing per hour for that employee, and that's the amount you get to claim. The other question is an apprentice question. The employee has to be actively enrolled in the program. Hold on. Has to be actively enrolled in the program to be paid apprenticeship rates. Yes, that would be true. Otherwise, they have to be paid full journeyman wages. So here's another thing. You can have so you can't go down to Lowe's and say, hey, I'm going to pick up 3 people on the corner. You don't know very much about prevailing wage. We're going to put you on this project. We're going to pay you apprentices and we're going to teach you this stuff. No, that's not going to work. You're going to have to pay every single one of those individuals journeyman wage rates because they are not enrolled in and attending an apprenticeship program. The other thing is, if you have an apprentice, a legitimate apprentice that is not properly supervised, that apprentice will get paid journeyman wages and fringe benefits for the time they are not properly supervised. Let me give you an example. Let's say I have a journeyman working on a project for 6 hours, and I have an apprentice working on the project for 8 hours. The first 6 hours that apprentice works, there's journeyman supervision, all is right with the world. But there are 2 hours in which the apprentice is working without any journeyman supervision. And for those 2 hours, that journeyman has to be paid journeyman level wages and fringe benefits because they were not properly supervised. The ability to take advantage of the lower apprenticeship rates also requires that all of your apprentices be supervised, and they need to be supervised by an individual in that trade. So you cannot have an electrician journeyman supervising a plumber apprentice. No, you need a plumber journeyman to supervise the plumber apprentice. The other thing with apprentices is that apprentices always have to be employed in some kind of ratio. And those ratios are typically adopted by the apprenticeship program. So for example, I could have carpenters, and carpenters say, for every journeyman you have, you can have 1 apprentice. That's great. Roofers might say, you can have 2 apprentices to 1 journeyman. Plumbers may say, you have to have 2 journeymen for every 1 apprentice. So those rates, those ratios will change by craft. And so if you had, we'll just say, I'll give you an example of a 1-to-1. I have 1 carpenter, 1 apprentice, everything's great. I now have 1 carpenter and 5 apprentices. Now we have a problem. That carpenter can supervise 1 apprentice. The other 4 apprentices will have to be paid journeyman wages and fringe benefits because they were employed out of ratio and didn't have appropriate supervision. There is no classification or wage rate for pre-apprentices. They either have to be enrolled in an apprenticeship program or they get paid journeyman wages. And there is no such thing as a helper or a trainee classification. You either have journeymen or you have apprentices. And I don't know how many times somebody says, well, this person doesn't know very much. And it's like, well, you either have to enroll them in an apprentice program or you have to pay them journeyman wages. Those are the alternatives on these projects. All right.
I just want to note quickly, please, if you would like the recording and if you would like the PowerPoint presentation after this session, please fill out the SurveyMonkey link. I have 15 responses so far, and there are 45 people in this webinar. So if you would like to receive it, please fill out the SurveyMonkey link. Do not post your information in the chat box because the chat box will go away at the end of the meeting. So please fill out the SurveyMonkey link if you would like the PowerPoint and if you would like the recording. Thank you.
All right, thank you, Bethany. So we've talked about prevailing wages, we talked about fringe benefits, and that's most of the requirements in Montgomery County. However, Montgomery County has a new local hiring goal that's been in place for the last year. And 25% of all new hires are to be residents of Montgomery County. So that's not saying that you come onto a project and you have to fire your people who live outside of Montgomery County. When you come to do work in Montgomery County and you already have your crews hired and established, that's fine. But when you have to hire new employees to staff this project, 25% of those new hires have to be residents of Montgomery County. So let's just say I have a crew of 20, and some of them live in Montgomery County, some of them live in Baltimore County, or somebody lives in Howard County or Anne Arundel or someplace. But that's okay. You have your team that's already established and you're coming to work on the project. Now you say, wow, we've got to hire some more people for this project. I need to hire 8 new people. So out of those 8 new people, 2 of them need to be residents of Montgomery County. So you need to do some extra outreach to make sure you're recruiting workers from Montgomery County. So don't just post your ad back where your company is headquartered. You're going to want to reach out within Montgomery County to find your skilled workers for your project. There are quarterly reports that are required to be submitted. This isn't an option. You can say, I didn't hire anybody, I'm not hiring anybody, and that's fine. Or if you did hire, these are the number of people I hired, and these are the number of people who reside in the county. The forms can be found in LCP Tracker. So I haven't talked about this, but all of the certified payrolls and all of the labor compliance documents that we look for are submitted through a web-based program called LCP Tracker. Now, that program is available to use a contractor at no additional charge, but you have to submit all of your certified payroll and labor compliance documents that way. And there's a place where you put your certified payrolls, and then there's a file called eDocs. And eDocs is where you're going to put your fringe benefit information. It's where you're going to put a copy of the apprenticeship certificate for the apprentices that you're going to employ. We might need you to upload a copy of your health and welfare statement from the insurance company there. But there is forms under eDocs. And so when you go to eDocs, you can either download forms or you can upload forms. And there's a number of documents in eDocs that you can download. And the quarterly reporting form for the local hiring goal is found in eDocs, and you download that document, you complete that document, and then you upload that document back into eDocs once it's complete. I do want to point out, so in eDocs, there are also, when you upload a document, you pick the category of document. So when you're uploading fringe benefit information, you designate it as fringe benefit information. Or when you're doing the local hiring report, you're going to designate that. It's like, what kind of report is this? And you want to go and pick, obviously, local hiring goal, and then you're going to upload that document. If you're doing apprentice, you're going to select what kind of document is this? You're going to select the apprenticeship, and then you're going to upload the apprenticeship certification. I had a chat. What happened to it? All right. Well, let's talk about training contributions. So the state of Maryland adopted a separate obligation to contribute a portion of the prevailing wage amount to training committees. So if you work on projects directly for the state or outside of Montgomery County, you will have to make contributions to the training committee. Montgomery County did not adopt this requirement for any of its county projects. So we are not looking for, and we will not track training contributions made by any of you on this call. So Montgomery County did not adopt this. So we're not requiring this. You might also want to check other jurisdictions in which you work. So I believe Baltimore County also did not adopt the training contribution as part of its prevailing wage package. I don't know what Anne Arundel or Howard County has done. They may have adopted it. They may not have adopted it. This is something you're going to have to check if you work outside of Montgomery County. But no training contributions are required for these county projects. Now, for those of you who have worked on projects before, we will frequently attend the pre-construction conference, either in person or via Zoom, and we'll talk about the various prevailing wage requirements. We also, on a regular basis, conduct on-site interviews of workers on the project. So typically, Carlos Hernandez works for our company. He comes out to the projects once a month and will conduct random interviews of workers. So any of you who are prime contractors on the call, you will probably get a call or have a conversation or have an email exchange with Carlos saying, hey, I'm going to be in Montgomery County these 2 days or these 3 days or whatever it is, and I'll be walking your project. He typically will check in with the prime contractor once he gets to the site, and then obviously, conduct on-site interviews. So he does that. And let me just tell you what an interview is. It's not particularly difficult. He's going out there and he will say, hey, I'm from CCMI. We're doing the prevailing wage monitoring the project. And we just have a couple of questions for you. What's your name? Who do you work for? Are you a journeyman? Are you an apprentice? What kind of work are you doing? What kind of tools are you using? Approximately how much are you getting paid? Paid. Does that include any kind of fringe benefits? Do you get like health and welfare or pension, vacation, holiday? And that's pretty much the extent of, do you ever work overtime on the project? Do you get paid time and a half? Do you get paid more money if you work overtime? Do you typically work Sundays? I mean, just general questions like that. The entire interview should be done in 5 minutes or less. Carlos will frequently ask the worker for an ID and the stub from their last paycheck. Many employees carry this, and we ask you to inform your employees that this will occur or may occur on the project. And we just ask that they be honest with Carlos and provide the information he needs. We're doing this so we can go back and cross-check the information we receive from the worker to the certified payroll requirements. All right, the other thing that Carlos does is he verifies that the prevailing wage rates are posted on the project. And the posting of the prevailing wage rates at each job site is required by county law. So I just want to be sure that when we come on site, we're interviewing your workers and we're going to be saying, well, where do you have the prevailing wage information posted? So it can be available to the workers. The workers have to have access to that if they want to look and see if they're being paid the correct prevailing wage rate. So generally, we interview the workers to determine, if they tell me, oh, I'm a laborer, but I'm watching them finish cement, which is cement mason's work. We're going to make that note, and we're going to take a look at the certified payroll to see if the worker is classified as a laborer or if they're classified as a cement mason. Or, somebody tells me, I don't know, I'm a laborer, but I've got them, installing copper pipe. Well, that's not laborer's work. So again, we're looking at what they're doing as well as what they're telling us. And again, we ask them to carry a recent paycheck stub. And all this information is cross-referenced against the certified payroll submitted. All right, let's move on to, we're about an hour into this. Bethany, do you want to give people a break or can I keep going?
I'd say keep going.
All right, because I know if I let you go for 5 minutes, you won't come back for 15. So we're going to keep rolling here. So certified payrolls are required to be submitted on all county projects under their prevailing wage ordinance. And all of those are submitted through LCP Tracker. So I just want to share with you, those of you who have not used LCP Tracker before, I believe the county has selected LCP Tracker because it is the most user-friendly web-based system out there. I've been doing this work for a long time, and my entire staff prefers to have clients that use LCP Tracker as opposed to other systems that are out there. It is super easy to use, and they have lots of different training options. They have written instructions. They have instructions that pop up on the screen if you have questions about something. They have, they do, I think it's twice a week, they do a live sign up for, getting started on your LCP tracker that they provide to contractors for free. So lots of good information there. The important thing to remember is that payrolls must be submitted within 14 days after the end of each payroll period. I cannot enforce the importance of this enough. They must be submitted within 14 days after the end of your payroll period. If not, liquidated damages will apply, and those liquidated damages do not go away if you all of a sudden upload all of your certified payroll. So for example, there's a contractor working out on a project and they don't submit any certified payroll for 2 months. And we go back to them and say, hey, you're going to be subject to liquidated damages because, a bunch of these payrolls are already due. At least 6 of the 8 payrolls are due, right? Within the 14 days. They're already past due. You're going to be assessed liquidated damages. So the contractor very hurriedly goes in and submits all 8 weeks of certified payroll. The penalty, the liquidated damage amount for those first 6 payrolls is still there. It doesn't get erased because you eventually submit the payroll. So please, please, please make sure that whoever's doing your payroll is aware that once the payroll period ends, those certified payrolls need to be uploaded within 14 days. Now, I'll give you what I call a best practice. The best practice is to submit the certified payrolls within 7 days. And the reason for that is if you're ever working on a federal Davis-Bacon project, the federal government has a 7-day limitation on when you can submit certified payrolls. So if you create a policy that says, I'm going to submit my certified payrolls within 7 days after the close of the payroll period, then you don't have to worry if you're on a federal project or on a state project or on a county project or on something else, because those payrolls will automatically already be in the system. That's just my tip to you. Also, all weeks must be accounted for from the date you start on the project until the project is completed. So if there's a week where you're not working, we need a statement of non-performance. Super easy. Log into LCP Tracker, click the week ending date. It'll pop up a couple of boxes, and you want to check the one that says no work was performed this week, and then certify that, and you're done. So it's very easy to file statements of non-performance. But let me be clear as to the time period we're talking about. Let's just say the project started February 1. You don't need to be out to the project yet. You don't have to be out to the project until May the 15th. So you start work on May the 15th and you work a week, and then no work is performed the second week, and then you're back for weeks 3, 4, and 5. You don't need to submit anything to LCP Tracker until the first week you work. So starting May 15th, at the end of that payroll period, you are going to then have to submit your payroll for week 1. Week 2, there's no work, so I'm going to be looking for a statement of non-performance for week 2. And then you have weeks 3, 4, and 5. I'm going to look for those certified payrolls. And then let's say you're just done with your work. After 5, you're going to mark that last payroll as your final payroll. And then we know you're done. Okay, we can start at the beginning of the project. We know when you've completed the project because you've marked final. And we can make sure that we have payroll for every week, or we have a statement of non-performance. So it's important that you and your subcontractors and everyone working on the project understand that we need to account for the payrolls from the first day you work until the last day you work and everything in between. So the other thing I want to really stress is that each contractor has the obligation to maintain complete and accurate payment records, and that includes time cards, canceled checks, wage statements, paycheck stubs, all of that. So if for some reason the county has CCMI launch some kind of investigation, maybe there's some complaint that, somebody got shorted on their time card, or they didn't get paid overtime, or whatever, we will come back and we may ask for time cards, canceled checks, wage statements, paycheck stubs. Now, some of you may say, well, we don't, this is the 21st century. We don't do canceled checks. Everybody gets direct deposit. That's fine. We just have to get some kind of documentation that says they've been paid. But what is required is that we have that documentation in the background and available if we need to conduct an investigation. And I just want to make sure that it's your obligation. So if we ask for this information and we are told, well, I don't have that, I don't keep time cards, or, once I put the time cards into the system, I don't keep them, I throw them away. Well, no, you need to keep all the backup documentation as it relates to time cards, payment to the workers, wage statements, pay stubs. A contractor will be liable for underpayment of prevailing wages by sub-tier subcontractors. So if you have a subcontractor on a project and they are, for whatever reason, didn't pay the appropriate prevailing wage rate, you will be responsible for paying those wages if that subcontractor goes out of business, refuses to pay, a whole variety of other things. If in fact liquidated damages are applied to a subcontractor because they didn't submit their payroll information on time, then what that means is those liquidated damages will be withheld from the prime's payment. So because we don't have a direct contract with the prime, we have to withhold that from the prime's payment. So the prime will, I'm assuming, will then say to the sub, hey, you're not getting 100% of your payment because you didn't submit this and the county has withheld that money. So you should know that if there is an issue with your subcontractor and the county needs to withhold money, that is going to come from the prime's progress payment or final payment until the issue is resolved. So please keep that in mind. The liquidated damages are $10 per calendar day for late payroll. So remember, you've got to submit the payroll within 14 days. If you're a week later than that, that's going to be $70, $10 a day for being late. There is also a liquidated damage of $20 per worker if there is a wage underpayment. And that includes an overtime underpayment. It includes if you misclassified the worker. So let's just say the worker was performing electrical work and you classified them as a laborer and paid them as a laborer. We will go in and say, no, you've misclassified that worker. They have to be an electrician, and therefore you will be assessed $20 per day per worker for every day that that individual has been misclassified and underpaid. So these liquidated damages are assessed even if the payroll is corrected and restitution is paid. There is also a $50 per day liquidated damage for not posting your prevailing wage rates on the job site. And I have to tell you that your prevailing wage rates that we get from the DLLR for these projects are sometimes only one page and sometimes they're only a few pages. So it should be very easy for you to post these wages available. If for some reason you are, I don't know, you're working on a road, there is no job site trailer, there's nothing where you can post this. These things, along with your other mandatory postings, should be in a binder in the truck somewhere where if an employee says, hey, I just really don't know, how much am I getting paid? Am I supposed to get paid on prevailing wage? Somebody could whip that out and let them take a look. So just in case you think you're being treated unfairly here, I wanted to give you a comparison of what some of these other states are doing. So if you have a delinquent payroll, Montgomery County assesses $10 per day. In California, a delinquent payroll costs you $100 per day per worker. So if you have 5 workers on your crew that's on that certified payroll, that's a $500 penalty per day. The underpayment of wages or misclassification of workers is $20 per day per worker here in Montgomery County. It is $200 per day per worker in California. The failure to post wages is a $50 per day violation. California does not have a corresponding liquidated damage, but they do charge $100 per day for any apprenticeship violation. So I probably now convinced all of you that you do not want to move to California and do work there because the prevailing wage penalties are horrible. But I just wanted to give you some kind of comparison when they were thinking, what these liquidated damages could mean. So here are a couple of links and resources where you can go to the county website and get prevailing wage information. There's also frequently asked questions, which I think contractors who are don't do a lot of prevailing wage would be interested in. So, that kind of concludes the Montgomery County portion of this, but I wanted to also take just a few minutes and talk about federal prevailing wage and when federal Davis-Bacon applies to your projects. So if you're on a project with the county and federal Davis-Bacon rules apply, those rules will control, they will preempt the prevailing wages of that the county and the state have. Hold on a second. I see a lot of let's see if there's anything here that I need to answer.
Yeah, I answered most of those questions, Deborah.
Okay, all right, thank you. Thank you. Okay, so now we're on a federal project. So we're on a federal project, we have to comply with the federal rules. That means you have to comply with the federal wage determination. The federal wage determination will be published with the county specifications saying this project is subject to federal Davis-Bacon, and here are the wage rates. There is specific language that will tell you in their bid specifications that, hey, this project's going to be subject to federal Davis-Bacon prevailing wage. And, so they'll tell you about that. They will tell you about the specifications. The wage rates are locked in at the time of bid. Okay? Not the time of advertisement, but at the time of bid. And the county is aware that 10 days prior to the bid date, they have an obligation to go and check and see if there's been any changes. And if there's been changes, they will issue an addendum to however they issue it online to their bidders list or whatever, that there's an updated prevailing wage determination. But those wage rates will lock in at the time of bid so long as the project is awarded within 90 days. If it's not awarded within 90 days, or if there's special housing projects and construction doesn't start within 90 days of closing, then the county has to go back and see if there are any updated wage rates. And if you've been awarded the contract, you would be entitled to a change order for the difference between the wage rate that was appropriate at the time of bid and the new wage rate that's required. So if the wages for laborers went up $1.50, you would be entitled to a change order to cover that change. Again, wages are paid based on classification of work performed, not on job titles, not necessarily on what a union agreement says. And Davis-Bacon rates and classifications are not identical to Maryland and Montgomery County rates. So my suggestion to you is when you get a specification that says this project is subject to federal prevailing wage, go look at that wage determination and see, as you're doing your takeoff, as you're preparing your bid, what federal classification will this fall under? And because you will have a wage and a fringe benefit that goes with it. The Davis-Bacon Act, for a period of time, used to cover surveying work. That has been pulled back. Federal Davis-Bacon does not cover surveying work anymore, does not generally cover any type of professional services. So the all-agency memo that was issued 212 in 2013 that says surveyors are covered, all-agency memo 235 issued, I want to say 3 years ago, says, just kidding, surveying work is no longer covered under Davis-Bacon. So I just wanted to point that out to you. If you have an omitted classification, a missing classification on a federal determination, there is a different process that you need to go through. It is called the conformance process, and there's a special form called SF 1444. Steve Noguera's ultimately, I mean, is very familiar with this form and this process and how it has to work. So when you look at those wage rates, if your classification isn't there, then let's have a conversation. Let's have a conversation with Steve, and he can loop in CCMI to help with that process. I would encourage you to do that sooner as opposed to later. We would submit the form with a backup scope of work, a backup on how you arrived at the wages and fringe benefits you are proposing for that classification. It typically takes the Department of Labor's conformance office about 30 days to respond. I've gotten a response as quick as 7 days. I've had responses that took a couple of months. So obviously, the sooner we can request this, the better. But you don't have to stop work when we put in a conformance. You are allowed to pay that worker the amount of money you have listed on that conformance form until we hear back from the Department of Labor. And when you hear back from the Department of Labor, two things will happen. They'll either say, we're approving this classification and the wage rates, or we're not going to approve this classification. Instead, this is the classification you will pay, and this is the wage rate. So it'll be very clear in the letter that's issued by the Department of Labor that says, this is the classification, this is the wage and fringe amount. If you have to pay a higher rate, if you have to pay restitution to the workers, you're going to have to pay that restitution all the way back for the entire project. And typically, the Department of Labor allows you 1 to 2 payroll cycles to get that fixed. Here's the other thing. Davis-Bacon requires that wages be paid weekly. So when you do your weekly certified payroll, there obviously needs to be a corresponding payment with that. The federal government also has the Contract Work Hours Safety Standards Act, which requires overtime at 1.5 times for everything more than 40 hours in a week. They don't have daily overtime. They don't have special overtime for Saturdays, Sundays, holidays. It's just generally overtime after 40 hours. If there are any specific holidays, they will be found in the Davis-Bacon wage determination language. If you have electricians, you look at the bottom of the electricians section, and they will tell you if there's any special holidays or payment rules that also apply. If you've got carpentry, you're going to look at the bottom of the carpentry section to see if there's any holiday or special Davis-Bacon payments that have to be made. Davis-Bacon has this strange melded overtime requirement. I'm going to go over it ever so quickly, and then I'm going to tell you the best practices you can do so you do not have to do this calculation. So the melded rate will be used when your employees work in more than one classification. So let's just say I worked a laborer for 22 hours at $25 an hour. I worked a carpenter for 25 hours at 35 hours. That's a total of 47 hours. So I do that calculation, and that ends up being $875 plus $550. So that's a total of $1,425. I divide that by the total number of hours worked, which is 47, and I get this melded rate of $30.32. And then I calculate overtime based on this melded rate. It's not the carpenter rate, it's not the laborer rate, it's the melded rate. Now, all of your payroll departments are going to have their heads spinning and that say, this is crazy. I would have to do this calculation for every week that anyone ever worked overtime. So let me share with you the exception. You have to have a written policy, which you have communicated to your workers before they begin work. And that policy in general terms should say, when you perform overtime work, we will pay you the wage rate that is associated with the classification of work you are performing. Okay? The employee has to agree to the policy. Best practice, when I'm hiring new employees, I give them that overtime policy. I have them sign it and date it. And now I have their agreement. So it's in writing. It's communicated to the employees before they begin work, and the employee agrees with this. That's the easy part. Now the employer has to have sufficient documentation to support the overtime formula based on actual tasks. So your time records are going to have to show that, maybe, Monday I worked 8 hours as a laborer. Tuesday I worked 8 hours as a carpenter. Wednesday I worked 8 hours as a carpenter. Thursday I worked 5 hours as a carpenter and 4 hours as a laborer. And then on Friday I worked 10 hours as a carpenter. So I have to have those classifications so I know that the extra 3 hours, that's a 43-hour week, I'm going to know that those extra 3 hours have got to be paid in the carpentry classification, because I have that laid out and documented on my time cards. So it's not enough that you communicate the policy and they agree. You also have to have sufficient documentation to back this up. So apprenticeship is individual actively enrolled apprentices in a state-approved program, Maryland, DC, Virginia. The federal government just says you have to have an apprentice that is enrolled in a Department of Labor approved program. And most of the states on the East Coast have a reciprocity agreement, an agreement that says, hey, the state has these 16 apprenticeship programs, and the Department of Labor says, we're good. We bless all of those 16 apprenticeship programs. Again, you have to be employed in the proper ratio, just like we discussed before, and they have to be properly supervised. There are no pre-apprentices, there are no helpers, there are no trainees under federal prevailing wage. Okay. This is a copy of the federal posting that has to occur on projects. This one is in English. It's super easy to get. Just Google Davis-Bacon poster and a link will pop up and you can get this one. They come in English and they come in Spanish. Those are the only two languages they come in. You can print this up on your printer, 8.5 by 11. You are good to go. In that big box down here, you should be putting either CCMI's information, contact information, if an employee has a question about whether they're being paid the correct prevailing wage rate, or you can put Steve Nagara's information, his email and his phone number. And so that if a worker has concern, they can either send an email or call someone and say, hey, I have a question. Am I getting paid correctly? And we can explain how the prevailing wages work. I'm working on a matter right now where a couple of employees called, and some of them just wanted to know what was required. And we said, this is what it is, and you're being paid correctly, and that's great. And in other instances, we find that perhaps they've been misclassified and they're owed some additional money. But please put Steve's contact information in there, or at Steve's request, you can put CCMI's information in there. Lynn Halterman is the CCMI employee who is responsible for monitoring our Montgomery County projects. She's the one you would typically interface with. So I would assume we would put her email and phone number there. Okay, there is, Davis-Bacon requires that you only employ individuals who are legally able to work on the project. That means everybody who's working on the project has an I-9 form completed and on file with your company. New forms came out a couple of years ago. You don't have to go back and have people who completed forms prior to 2023 complete new forms, but you should be using the current form as you're rolling this out. The Department of Labor or other federal agency may require to see copies of your I-9 forms, and I will tell you most of the time they don't. It's in a rare instance that they're going to ask for these, but I just need to tell you that they have a right to ask for them during the course of one of their federally funded projects. Here is the link to the current I-9 form if you don't have the current one. And the other thing is you can also be using E-Verify. So once you get the I-9 form back, you go into E-Verify to verify that your employees are in fact legally able to work here. I use this form, I use the E-Verify all the time. It's great. And if I have an employee who's not a citizen, I take their documentation and I put it into E-Verify, and I've always gotten back confirmation that my employee is approved and, you know, that they're allowed to work in the US. Here are the some important links for some of you who maybe are familiar with Montgomery County prevailing wage, but not federal Davis-Bacon. This is where we go to get the determination, and the county is the one who will do that. So you don't need to go to sam.gov to get the wage determination. But if you want to go there and kind of look around and see what's there, feel free. Feel free. There's lots of information on sam.gov, but you don't need to go there. The county's going to take care of that. If you're brand new to Davis-Bacon compliance and you're looking for an overview, please tap into the second link. There are PowerPoint presentations on federal Davis-Bacon and how all that works, and all of that is available. The Davis-Bacon has not just the law, which is about a paragraph long, it also has regulations, which are found under Title 29 Code of Federal Regulations, so 29 CFR Part 5. And those are all the rules relating to Davis-Bacon projects on this, for this. The Department of Labor also issues what's called a Field Operations Handbook that provides a more detailed explanation about fringe benefits, about what work is covered, just a whole variety of things. And so I've also provided to you a link for the Field Operations Handbook, Chapter 25. I don't know about you. I keep this available. So if there's ever a question, I can go in and find the answer fairly rapidly. You should also know that the federal government issued a new WH 347. So that's the federal prevailing wage form. They issued that the end, like, I want to say I got it February 1st, but I think they technically issued it the end of January. So there's a new form in town. We're going to proceed with what we've got in LCP Tracker. They're working at keying that in. It's all the same requirements. It's just in a slightly different format that they want their form populated. It actually has fringe benefit detail on the back of the form, which they didn't have before, and some other small items. So these are the links that I think will help you if you have questions about federally funded prevailing wage projects.
Deborah,
Yes.
There is a question on E-Verify, and it reads, can we accept the E-Verify for a parent company if the company has several child companies, or is each company required to be registered independently?
That's a good question, and I don't know the answer. So I'm sorry about that. I'll be honest with you, it depends on where's your payroll coming from, I would think. Is your payroll coming from the parent company, or is each individual company, sub-company underneath it issuing their own payroll? I would say if you're issuing your own payroll, and so therefore you're collecting your own I-9s and you're verifying your own employee status, then I would think you would do it on the smaller individual companies. But if everything goes to corporate headquarters and corporate headquarters is the one who collects the I-9 forms and is running the E-Verify, then I think that would be acceptable. It depends on how your company's set up. I'm sorry, I don't have a better answer for that. Is there another question?
There is. If each company has its own EIN, each company needs their own account in E-Verify?
Again, I'm not certain, but I would tell you yes. That is how I've always operated. So, you know, and if you don't, you'll just get to explain to the Department of Labor why you didn't. But if you have your own EIN number, I would think that you would have your own registration under E-Verify. Talk to
Yes,
your corporate people on that.
yes. Hello, this is Brian. Yeah, that makes sense because when I was on the 395 Express Lanes, we had a lot of different companies. They all did their own payroll certification and sent us certified payroll. Each
Yeah.
separate company sent it to us.
Yeah, and that is what I would expect. Okay,
Deborah,
so yeah,
can you just go over the last question that was just submitted to go over 1099 once more?
okay. So anyone you issue a 1099 to has to be an independent business. They have to, you know, have a place of business, even if it's in their home. They have to have a business license. They either, if they're a sole proprietor, they can operate off of their social security number. Otherwise, they need an EIN number. They, the IRS requirements is that for somebody who is an independent business is they have to work for multiple clients during the course of the year. Unless they're, you know, most independent businesses are not sole proprietorships with only the owner as the individual. The owner has to, the company has to provide their own tools. They have to be able to independently contract with the party with whom they're providing the services. They have to have the risk of profit and loss based on what they do. They're to provide their own tools and equipment and supplies. There's a lot of requirements under the IRS for what makes up an independent business. And only an independent business gets a 1099. You cannot have somebody on your payroll who is who's working for you and you're directing what they're going to do and you're telling them you're going to be here at 8 o'clock today and you're going to work till 5 o'clock this afternoon and you're going to be doing X, Y, and Z work. That might be a part-time employee. That might be a temporary employee that you're only employing for 3 weeks on this project, but they are in fact an employee. They are not a 1099 independent business. There is no such thing as a 1099 employee. The IRS does not recognize that. So they're either an employee and they have to be treated as such, or they're an independent business, in which case they should have a business license, they should have a separate contract. Those things are distinctly different. Okay, let me move on to Davis-Bacon liquidated damages. So if there's an error, if you've made a mistake on classification or prevailing wages or whatever, usually a first offense offender is basically just told, look, you didn't do this right. You have to do this right. You have to fix it. You have to pay the employee accordingly, and don't make any, fix this and know for your next project not to make this mistake. The big hammer the federal government has is they can debar you from public works. That means they can say you cannot perform work on any project that has federal funding in it for 3 years. That typically doesn't occur with a first-time good faith offense. It will occur if you've been audited before and they're coming back to you again with the same offense, or if there's some kind of gross violation on the first offense, like somebody's taking kickbacks. That for certain would probably get you debarred. And let me just give you an example of a debarment that I had a client experience a number of years ago. He was doing Davis-Bacon work, paid the correct prevailing wage rate, was audited, and they came back to him and said, hey, we require that you pay your employees weekly, and you're not doing that. So we need you, when you work on a Davis-Bacon project, to pay your employees weekly. And the employer said, gee, I'm so sorry. I didn't know that. I'll make sure employees are paid weekly moving forward. A couple years later, they're working on another project. They get audited. Prevailing wages are fine. Department of Labor comes back and says, hey, we audited you before and you agree that you would pay your employees on a weekly basis, and you're not doing that. So now we're going to kind of write you up, and there's no financial penalty, but you've got to promise that you're going to pay your workers on a weekly basis. Contractor signs the document. We all go on our merry way. About 18 months later, working on another federal project gets audited. The government comes out and says, we've already told you twice that you have to pay your workers on a weekly basis, and you're still not doing it. So now we're going to debar you from public works. You cannot work on any federally funded project for 3 years. So it's not just screwing up on the prevailing wage aspect of it. If you're not complying with the other rules and you're a repeat offender, the U.S. Department of Labor can come back and debar you from doing federal work. There is an overtime amount. If you fail to pay overtime after 41 hours in a week, it says $31. It just went up. It just went up to $32. So I will fix the slide deck that I resend back to Steve and Bethany and change this to $32. So should know that it just went up to $32 per day. And this is adjusted annually. So it could stay $32 for a couple of years, or it could go up next year to $33 or $34. It's all based on cost of living, etc. Most contractors don't get assessed this because everybody knows you've got to be paid overtime after 40 hours in a week. So I got done a little early, but I wanted to leave enough time for questions. I have about 14 minutes for questions. Now, this is the contact information. So Lynn Halterman is the CCMI representative handling Montgomery County projects. That is her email. That is her direct phone number. Lynn's supervisor is Jessica Finau, and her information, and I'm everybody's supervisor because I'm the boss. And there's my information as well. So if you have questions, please start out by contacting Lynn. And if she can't answer the question, I'm pretty sure Jessica can do that, since Jessica is my most tenured employee. She has been with CCMI for 21 years. So having said that, I'm going to stop the sharing and let's see what additional questions
A
are
reminder, if you do want a copy of this PowerPoint, please enter your name and email in the survey link that I just put in the chat. Thank you.
Okay. Let me see what else here. Okay, I covered the 1099 employees. Well, we will typically, the question about the 1099, I mean, if they worked on the project and the contractor is claiming them as a 1099 employee, we will circle back and let them know that they're not allowed to do that. So we'll typically catch that, because if you're paying an employee as a 1099 employee, they're not taking out taxes, and that's easy to spot for that. So what's the quickest way to recognize a 1099 independent contractor? So if somebody's listed and there's no deductions taken out of their paycheck. Now, that might be true if you're dealing with an owner of a sole proprietorship. That would be correct, because an owner of a sole proprietorship is not a quote employee where they take taxes out. But most 1099 employees are not having any taxes taken out of their check. So that's one of the first, I want to say, giveaways that I can spot a 1099 employee. Okay, Steve, do you see any other questions?
No.
Alrighty, so I'm going to end the recording. I will update that last slide with the increased liquidated damage for failure to pay federal overtime after 40 hours. I'll send it to Steve. And, you know, you're welcome to contact myself or Jessica or Lynn, or obviously Steve and his team with any additional questions.
There's one more question just came in.
All right, let me see. You were hiring a 1099 individual. That's fine. You can hire a 1099 individual. You should have a contract with them, and they should be submitting their own certified payroll unless for some crazy reason they're exempt. So I don't know what that is. I don't know who you're employing on an individual basis, because if it's an inspector's not covered by prevailing wage. If it's a surveyor's not covered by prevailing wage. So I don't know what other type of individual you would be employing, and whether or not they would be exempt. But if they're covered, they have to submit their own certified payroll and be in the system, because they're an independent business. That's it. Okay, I think I've got everything.
I think you did. Thank you, Deborah.
All right, thank you very much. I'm going to
Oh, there's one question.